Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today, we're cracking open Vicarious Surgical's latest 10K report, their annual checkup. It's a company trying to revolutionize surgery, but is their financial health as groundbreaking as their robots? Let's find out if they are ready to perform some surgical moves in the market, or if they are about to need some critical care. This report is like a company's diary. The main goal of the video is to get to the meat of the annual report. Specifically to know more about the financials, we will navigate through this using scroll tags to get to the juiciest bits so we don't get lost. First things first, this report covers their performance up to the end of last year, December. So everything we discuss is a look in the past and won't tell us what their situation is right now. Before we get too excited, remember the forward-looking statements. This is corporate speak for don't sue us if we're wrong about the future. Keep that in mind as we discuss their plans and predictions. A key thing to look out for is if the report mentions the company's ability to continue. That's a big red flag. It means that they are not sure if they have enough money to keep the lights on. Now let's peek at the summary of risk factors. All companies have risks, but it's important to see what management is most worried about. This section offers a quick view of all the things that are keeping the executives up at night. One of the first things mentioned in the risk factors is the possibility that they are unable to raise additional funds. If the company doesn't find a way to get more funds, it will be unable to continue operating their business. This can mean needing to slow down their development or even shut the business down altogether. Another major risk is that the company has a limited history and no product candidates with authorization, meaning that they haven't really proven that they can do what they say they can do. The main idea behind Vicarious Surgical is creating robots for surgery. Not just any robots, they are focusing on robots that can make surgery less invasive, hopefully leading to better patient outcomes. They are going after a big market of around 45 million procedures every year. They want their robots to be used for things like hernia repair and gallbladder removals. Here is some information about their view on existing robotic surgery options. It's expensive and difficult to use. The current systems are clunky, require a lot of space, and aren't always easy for surgeons to learn. The Vicarious Surgical system wants to address the shortcomings. They say their robot will be smaller, more affordable, and easier for surgeons to use. That being said, it is not yet authorized by the FDA. If they receive authorization by the FDA, they plan to expand their claims and address additional clinical needs. Some of the procedures that are being targeted are inguinal and hiatal hernias, hysterectomy, and cholecystectomy. One of the most valuable items for the company is its intellectual property. Patents give the company some protection from other companies copying its designs. This is very important for a complex company. For the last year, they spent around $40 million on research and development. That's a hefty sum, highlighting how much they are investing in their technology. They face competition from bigger companies. Giants like Intuitive Surgical and Johnson & Johnson are already in this market. Smaller companies always have to be wary of giants in their space. The next section is very important: government regulation. As a business that performs medical procedures, they are subject to a lot of government regulation, so it's important to understand what kind of risks are inherent. The laws and regulations governing their business, including interpretations of those laws and regulations, are subject to frequent change. Another important consideration is HIPAA. They must comply with laws to protect patient data. A positive news item is that the FDA has accepted the robotic system into its Safer Technologies program. It's like getting a foot in the door with regulators. That being said, this does not mean the device is approved. As of June, the market value of their stock held by non-affiliates, so the stock held by the average retail investor, was around $30 million. This is a decent amount, but also a small amount when compared to other players in the space. Let's dive into the management's discussion and analysis, or MD&A. This section provides insight into how they see the past year and what they expect going forward. This section is required and the numbers can be dry, so let's make it exciting. Here is the big picture. They lost $63.2 million last year and $71.1 million the year before. That's a lot of money. Also, since they haven't sold any products yet, they have not generated any revenue. As of the end of the year, they had about $9.7 million in cash and around $39 million in short-term investments. It's important to see if this cash on hand is enough to cover their losses. They believe they have enough funds to keep the business running into the first quarter of 2026. So we have until Q1 2026 until there is a real risk of the company running out of money, but that's if everything goes to plan. As mentioned before, it is very important to keep an eye on the cash. Their research and development expenses were about $40 million last year and roughly $47 million the year before. That indicates they are spending less on this crucial thing, which isn't necessarily bad, but we do need to keep an eye on it. Reading through the risk factors, a key one is potential production problems, meaning if they can't manufacture their robots properly, they can't sell them, and their business goes nowhere. And finally, a section that almost every public company needs to address, the material weakness. They admit they have a problem with their financial reporting controls. This is something that they should take very seriously and investors should keep in mind. Now, let's look at the statement of cash flow to see how they are doing. In the most recent balance sheet, the total stockholder equity is about $46 million, compared to $97 million the year prior. Now, finally, an opinion about the company from an independent accounting firm. The auditors are saying that the financials are presented fairly, but they are still concerned about their ability to keep operating. Now, stepping back and looking at the big picture, Vicarious Surgical is a high-risk, high-reward company. The potential upside, if they can successfully revolutionize surgery, is massive. They have a real focus and plan to address limitations in the surgical space through innovation, which could be a big win. But the risks are definitely there. They are burning through cash. They still don't have FDA authorization, and they are going up against established giants in the medical device world. So is Vicarious Surgical a buy? That really depends on your risk tolerance. If you believe in their vision and can stomach the volatility, it might be worth a small bet, but definitely do your homework and keep a close eye on their progress, especially their cash runway and regulatory approvals. Thanks for watching. If you found this decoder helpful, be sure to like, subscribe, and hit that notification bell so you don't miss future videos.